Hello and welcome to my channel. Welcome to my channel because I think you're gonna like this one. And the reason I think you're gonna like this one is because we are going to talk about what you want to talk about, and you want to talk about small caps. Why do you want to talk about small caps? You want to talk about small caps because the Fed is gonna be lowering the rates. But they're going to do it a couple of times. So between 25, 50, 75, 100 basis points. More than once, basically. Now, that's the assumption, obviously. I mean, I'm not guaranteeing anything. But let's suppose that they do that because, as you could see, the inflation is under control. So they're probably going to want to do something. And as I said all the time, the amount of the market does better for small caps when rates are being low. Okay, so no further ado. What this channel is about is I want to educate it. I want you to not to try to predict the market, but to take advantage of it. Okay, you want to buy when everybody is selling, and you want to sell when everybody is buying. Right? It's not about recommendation and prediction. I'm not here to predict. I'm not here to look at the stars and tell you what's going to happen. No, I am basically giving you information and you decide what you want to do. At the end of the day, as an investor, you need to be educated. You need to know what is going on. You need to understand the environment that you're in right now. And more importantly, like any kind of investment, you need to understand the story. And right now, the story that we're in is the story about an economy that is slowing down. There's no recession. Check my other channel. We're not in a recession. We'll never know anyway if we're in recession until a year from now. Okay, so that's not the big deal. The point right now is we are in a slowdown, which is okay. It's a slowdown is fantastic because this way the Fed doesn't mind lowering rates, right? And it might lower rates even more than that you want to, because just in case we want to slow down too much, right? So on one end, he's going to slow the rates down because he doesn't need to keep them that high because the inflation is under control. I mean, look at the numbers. The numbers that we've seen show that inflation is under control. PCE was great. CPI also, so it's slowing down. That everybody's aware of that. So as the rates are going down, so basically the Fed, what they're going to do is they're going to lower rates, right? So this is good for small caps. But the thing is, they're probably going to lower it even further because there is a bit of a slowdown in the economy. So we don't want to have a recession, but we don't want to lower too much, because if you lower too much, then you feel that they're going to give the impression that they're concerned about the economy, and then we're going to be in a recession mode. I don't know if we're going to be in recession or not, but the point, if the market feels or think that we're going to be in recession, then all bets are off. We want to have it we want our cake and eat it too. So what's going to happen is he's going to lower rates, lower. Hopefully that keeps us out of a recession, which I believe it will, if you look at all the latest data. So that's going to be great and fantastic for small stocks. So small stocks are going to appreciate that. So small stock, okay. Now, when I say small stock, I don't mean any small stocks, right? What I mean is a very particular group of stocks. And let's go through them a little bit. Let's understand, let's learn about them, because now is probably a great time to make us some money. Okay, so let us talk about, first of all, let us talk about Miller Industries. Now, all the stocks that I've selected essentially have growth, they have low PE, they are small caps, and they also have low amount of debt. Okay. Now, of course, you're going to say, well, I don't know any of those names. Well, that's the point. Because you want to buy when everybody else is selling. You want to be the one that's out there buying the stuff that nobody's looking at. Because when everybody's looking at it, it's too late. If somebody tells you to go into NVIDIA, which I would, but not not directly through a stock, because probably through option, but it'll be different videos. The point is that you want to get into something that is easy to understand, that is undervalued, that has growth and no one has looked at, and it's going to take the win. It's going to, the win of the small caps is going to come. The win is going to push all the small caps up, because first of all, nobody has been looking at the small caps. Right? It was all about the Magnificent Seven, the Magnificent Seven. I think that story is a bit played right now. So let us take a look at Miller Industries. Let's look at the price risk. Let's take a look at the price of the past year. Now, if we look at the SME 50, the 50-day moving average, it is very trendy. Okay? There's a trend going on here, which is fantastic. Now, I know in August we had kind of a mishap and the confusion and everything else, but look at this very, very nice trendy chart. Okay, so if I look at from here all the way to here, we are doing quite well indeed, right? We are from the 40s into the 60s. We even hit the 70s. That thing almost doubled during that time. Okay, now what is that thing? What is it that this company does? Okay, so let's take a look very quickly at some of the items that I think is important. Obviously, it's a market cap 695 million. P ratio is very low. Okay, I mean, keep in mind that the market P is around 37 right now, so that's a lot. Look at the beta over there, which is the only measure of risk, quite frankly. It's at 0.98, which basically tells you that it's not too volatile. Scrolling down in terms of sales, look at what's going on with sales. Look at the nice bit of trend here. Look at the earnings per share of the past 3 years, right? August 24th, August 8th, Miller Industries soars year on high production volumes. What does that mean? Well, look at this. MLR reported a robust performance. That was in August. In the second quarter, revenue also saw up climbing 23%. The growth attributable primarily to increased production volume and consistent demand. That's a good sign, right? When sales go up, you want sales go up because of volume, not because you're increasing the price. So we increase the volume and we have some delivery. The company has managed to decrease its backlog to more historical levels, improving the flexibility of its distributors. Gross margin improved to 13.8%. The company is doing better. It's able to milk more money out of its dollars it's generating. Balance sheet position, it decreased some cash. Long-term obligation rose from 60 to 70 million. The company has 60 of long-term obligation, right? Basically debt. And look how much cash they have, 30 million. So they are very, very safe company. Okay, so that is not something that I'm too worried about. What else is it that we want to take a look at? We would like to look at the financials because, quite frankly, at the end of the day, they got to make some money. Look at the financial of this company, which is fantastic. Why is it fantastic? Look at this. Earnings per share, sales. We need to take a look at more details here. We want to take a look at the balance sheet, the income statement, and the revenues. What do we have in terms of revenue? Okay. Revenues up by region. North America, I mean, it's still a North America country, so there's not too much diversification, right? It's truck and buddies, basically. That's where the money is coming from. It's sales, it's shares outstanding. What else do we have? We have income of 71 million. How much debt do we have? Do they give you the calculated debt to EBITDA? No, they don't give you that. But let's take a look at the earnings snapshots, maybe. Well, anyway, trust me on this. I basically pick companies that have not such thing. Okay, so next, what do we want to take a look at next? Let's take a look at our portfolio. We're not going to look at we're going to the small cap portfolio. Okay, the next one we wanted to like a look at is Vulcan Materials. Again, this is a small cap. Let's see how this thing has been trending. The trend, if you look at the 50-day, it is a bit more rocky, right? It's been going up since May, and then since May it's been iffy. What's going on here? Well, let's take a look again at the amount of let's look at the beta. This also 0.82 beta, so this is under control. The P ratio though is a bit high at 35, and so what are you saying? Well, basically what you're seeing is that anything that has a high beta that's already bought and spent is having some issues, and this is probably kind of what's happening with Vulcan Materials. This is basic material company, building materials. So it is a big of an issue. I think the company has, hey, listen, it went from $200, right, in December, and it shot up to almost $275. But then the story has changed in the market. The story has changed in the market since April, May, June, right? This is kind of when our friend Nvidia started having some issues, the Magnificent Seven. I mean, the market started realizing, listen, this is a bit too much of a PE ratio. So let's calm ourselves down. So I think that one is doing great. The only issue, we could take a look at what they're doing with the financials, right? We could take a look at the financial. Let's look at the revenues. Revenues, look at that. It's very well diversified, first of all. It's growing. It's doing great. They do concrete, asphalt, consolidation, aggregates. The company is growing. It's just, I think this thing has been discovered already, and the price is up, and so I'd be hesitant. We do have some sales. We went from 5 to 7 billion in revenues. This is 50%. The earnings per share is kind of up as well, although a little bit of red, a little bit of downgrade. They're looking at so maybe this one I would buy on a weakness, but I would be a bit careful. Next, let's take a look at the next one, which is basically Romaco Resources. So Romaco Resources is basically coal. Now, Romaco Resources, as you could see, the 52 moving average, we have been trending down. It is a commodity, unfortunately. So that's something that you have to be comfortable. The P ratio is 11. The beta is 1. So it's not very, very volatile. You could see what's happening with sales. Now, there's still some buy reiteration. This is a play on a commodity. And obviously with the Democrats and everything else, right? So because the Democrats, essentially too much pollution. So maybe if Trump gets elected, that could be an interesting play, because obviously we need energy, we need jobs, and we need coal. So that the stock is down about 50%. Keep that in mind. Remember, you buy when everybody else is selling. Right? Don't buy when everybody else is buying, because it's too late. You want to do it, you want to do it in the right way. Next in our portfolio, we have ACM Research. Now, ACM Research, now we're getting into the technical, semiconductor material. So the company was doing great until April, great until May, and then we have been trending down, unfortunately. We've been trending down again. P ratio is 14. Why are we trending down? Sales are up. Earnings per share is up. Lots of upgrades of this stock. They're looking at $23. Wall Street ACM as a buy, should you invest? Let's take a look at this article. When deciding whether to buy, investors often rely on an analyst recommendation. Currently has an average brokerage recommendation. Well, I think I need some better information. Is attractive. Here's what you should know. This is from Zacks. They put a lot of why. Look, August 7th. Why the stock was climbing today. ACM Research among the winners today after the maker for cleaning semiconductor wafers posted better than expected result. The stock was up 18% in one day. So the company, the stock is doing fantastic. The company is doing fantastic, right? In August, see this? This is the period we're talking about here. right here. I mean, I guess there was some concern. Right, there was some concern here. Yeah, but the stock went up because of earnings again. So the company, the only thing is trending down. Now, you have to understand also, you got to realize that this is probably a good opportunity. Why? Because the stock is down. The market is starting to shun away from anything that is small cap, quite frankly. P of 14, why not? And this is electronic. This is growth. Don't forget, all these things are almost no debt if they're growing. So that's why I pick my stocks. Next, Immersion. This one I like a lot. Look at this one. This one has a P ratio of, let's take a look at it, 5. Now look at this. Look at this. From the beginning of the year, we started at 7 and we went to 14. We doubled in 1 year. And then since then, we've been coming back down again. What's going on? Well, let's take a look at. Now, keep in mind, the beta of this company is 1.5. So that's if you're going up, they're going up. If you're going down, they're going further down. And you're seeing the beta here, the beta impact, right? Now, is there anything that we need to worry about? I don't know. Sales are kind of steady. Earnings per share is doing great. Lots of buy recommendation. Immersion, a risky investment amidst short seller skepticism. Now, the thing with this company is a bet on augmented reality. We're going to take a look at why emission. So augmented reality has been an exciting development within the broader tech sector. So when you put the mask on and everything is resolved, they also play with this idea when you touch something, things tend to feel better, like on the stock, on the screen or in a car, right? I mean, these are not small. It's a small company, but it's not nothing. Investors are worried about the future. Robert, managing director of Loop, joined to discuss Mark Zuckerberg increased spending. So Mark Zuckerberg is spending a lot of money on augmented reality. He noted that the company has been spending about a quarter worth of earning on reality. Another interesting is that despite the immense spending in principally the MapQuest 2 headset, most tech experts have gotten the chance to try the headset believe that it loses in competition with other prices assessed. So, I mean, what's going on here really is the idea that do we really need this thing? Do we want to walk around and do we believe in immersion? Well, I know sometimes this is complicated to understand. Sometimes you don't know what's going to happen. But at the end of the day, you need to get into something that nobody understands, nobody has done. Otherwise, you don't make any money. I mean, right now, look at this. We're down to 8. And I haven't spoken about option on this stock. But let's just focus on stock right now. This is, for me, I'm just here to introduce you to the name. I'm just here to explain to you what the name is. You decide if you like it or not. I'm not going to tell you it's going to double tomorrow, but all I'm saying is growth, potential, low P, small cap, and we're going to use the wind that's going to pull us up. Pull us up the same way it pulled up the Magnificent 7. Then we have Consolidated Water. Look at the trend on this name, right? We were as low as 24. The stock hasn't done anything at all since the beginning of the year. And the P ratio is 10. And the beta is 0.18. It doesn't move. It's lethargic. But look at the sales. Look at the earnings per share. Right? We're up everywhere here. Okay, financials. Let's take a look at the financials again, right? They pay some dividend, believe it or not. But I'm not concerned. I want to take a look at the earnings. Earnings per share. We're up. Revenue, we're up. Okay. What else do we need to see? Let's look at more detailed revenues. Look, United States, Grand Cayman, look, it's a mix, right? There's a mix of United States, Grand Cayman, Virgin Islands. It's all over the place here. And we are up. Okay. Revenue by segments, we are up. Look at that. All segments are going up. Basically, what these guys do is they provide water, clean water. So they'll come to your city and say, hey, your water is dirty. Would you like some clean water? That's what they're in for. Believe it or not, I mean, I have an osmosis in my house. This whole complicated system costs $1 million. but basically it takes the water and it sips through and it cleans it and it brings it back to you. It's important. Because remember, you eat a lot of crap in the water that you think is clean. It's not so clean. So, I mean, I'm not trying to sell you a system here, but I'm just telling you that that's what these guys do. And this is a recurring system, obviously, because once a city has them, they keep using them. So that is always a good thing. Next, let's take a look at our fund. Gigacloud Technology. Again, we've been trending down here. Now, obviously, I'm not going to give you stocks that are going up because it's too late. You don't want to buy what anybody else is buying, right? The P ratio is 7. Nobody pays attention to this thing. The beta is 1.83. Be careful. Quite volatile. Okay? But, what is it that they do? Look at the sales. Look at the earnings per share. Come on. Everything is up on this thing. Look, recent article on Zacks. Gigacloud Technology is attracting investors. Here's what you should know. Has recently been on Zacks list for most search stocks. Therefore, you might want to consider some of the key factors that would influence. People like us are searching. One of the past month's shares have returned minus 33. The Zacks industry has lost 1.6. What do? It seems that based on low side covering, the stocks are revising the earning estimates to take the latest business trend into account. It's expected to post good earnings. The thing is, what I don't like with Zacks is they don't tell you exactly what the company does. But August 15, Russell 2000 stocks. Look, another news to buy on the dip. Recent, furthermore, interest rate, investor place, Gigacloud Technology. You see this? This is our company. Is a leading B2B marketplace provider specializing in large goods industries such as furniture. Report 3 analysts predicting GCT financials were strong. Up 100%. 8P, you know what is it? We have 100% growth and a P of 8. And that's why you got to be careful with the P as well. The P is only earnings per share. It represents earnings per share too. Earnings per share. So we look at the net income at the bottom of the net income and then we divide by the number of shares, by the stock price. But what does that mean really? Is that cash the price? No. So I wouldn't believe that too much. Next, what I will do, I will calculate some of my my favorite calculation, which has to do with the you take the price, you take the EBITDA and divide by the price, by the market cap, and that gives you a good estimation. And I always like doing that. So this stock is doing pretty well, right? Next, I mean, it's doing pretty well in terms of financial. Hasn't been discovered yet. Keep in mind, nothing comes free. Now, next we're going to do is Evertech. Evertech is one of my favorite. And it has been going down as well since, again, we're trending down. Okay? Trending down, P ratio is 32. That's the only issue. The P ratio is a bit high. So I would be a little bit concerned about that one. But at the end of the day, that's what you want. So here we are, folks. We got 8 stocks. We're going to start monitoring them. We're going to start following them. We're going to start understanding them. And we're going to start to see how we could take advantage of the market right now, which is basically going to favor the small stocks. Of course, you're going to say, well, hold on. Suppose you're wrong. Suppose there's a recession. But don't suppose that because, first of all, I don't think that's the case. But in case it is the case, in case we have a recession, what I would say is this. These companies have picked for growth. Okay. Suppose you take the growth away. They don't have much debt. And they're already underpriced to begin with. And they are good companies. And they're companies that deal with something that we need. And they're not $2 million companies. These are $100 million companies. But they are small caps. So let's bring that in, clock it in, follow it, and see what happens next. And don't forget, I want you to subscribe always, and I want you to like always.